Hey guys, I hope you can see me and hear me because Ken is coming a little bit late. So let's give us a few more minutes, 2, 3 minutes, and we can dive in. He should be back anytime soon. Until that happens, if anyone can let me know in chat if you can hear me clear and see me, I would really appreciate that. Okay, hello guys. Can you hear me by the way? Just so Ken is not here yet. He's coming soon, and I'm not sure if my mic is working. So if you can please let me know if you can hear me well. Yeah, perfect. Thank you very much. Hey everyone. Give us just 3, 4 minutes. Can be back soon, and then we can just dive in. Yeah, he's just joining. Perfect. Okay. Hello, Ken.
Hey, Jake.
Hello, how are you doing?
Yeah, I'm good, man. How are you?
Yeah, all good. Not bad actually. All good.
Good.
Okay, perfect. So, shall we do 1 more minute and dive in?
Yes, sir.
Could be pretty
Yes.
crucial week for central bank's decision. Some
Gosh, yes.
CPI, retail sales data. Market might be really volatile.
It is. I think we are expecting a volatile week, to say the least.
Yeah,
Indeed. Let me just get some points up here.
sure. Take your time.
Oh, here we go. What are all these? Bam, bam, bam. Oh, what's happening here? Okay. Okay. Download. All right. Okay. Oh, what's happening here?
Some technical issues.
Um, yeah, just trying to get a couple of things up. My It's almost ready here. Are we live?
Yeah, we're already live.
Cool. All right, guys. Hey guys, thank you for your patience. Yeah, we will get cracking 30 seconds. Just get everything up here now.
No problem. Take your time. Most people will join. So in upcoming minutes, so we still got a little bit extra time.
Okay, okay.
It's E8 official YouTube any giveaways today. Yeah, guys, the same that I had last time. So probably one can It's analyze the markets live. I'll just come up with few questions for you again, like I did last time, and whoever answered first last time, it was basically two people who answered first get the free evaluation. Depends on how many people will join in, probably. Sometimes it might be one, sometimes it might be two, but on every question there's one free evaluation. So yeah, I'll make up some questions, most likely trading related questions for you, just so you know. And it will be displayed if you haven't attended the last live stream. Then at the very bottom of the screen, there's going to be a question displayed. And whenever there's a question, uh, answer as quickly as possible. Can you analyze US30? That's probably. Yes, we do. That's the answer to the question. Do you guys accept the US traders? Yes, we do accept US based traders.
Coffee time. All right, baby. Gosh, it is hot here in.
Is
It's
it
getting
in
hot in
UK?
London. It's getting hot.
Really? We've got
Yeah,
terrible
man.
weather here in the
What,
Czech.
what's it like there, where you are?
Rainy, windy, not any good. So kind of
Do you,
envy if you have a sunny day.
do you get a good summers over there, or?
Yeah, mostly we do. Mostly we do.
Yeah. Okay, nice. Yeah, I mean, the summers here in the UK are nice, but they can be very like sticky, lack of breeze. Um,
Okay.
yeah, we've had it. To be fair, we've had a good run of sunshine here, so I can't complain because it's such a typical British thing to do, where they complain when it's raining, it's cold, but then as soon as the sun comes out, it's too hot. That's what people are like. But I'm loving it. I'm enjoying it. To be fair,
Okay.
I'm not planning to be in the UK too much longer. I think early next year I'm going to be leaving the
What?
UK.
Where are you living, if I can ask?
Yeah, I mean, I'm exploring a couple of options. Basically, the first potential route is Cyprus. So looking at Cyprus, because
Okay.
yeah, it's
Interesting.
good for contacts, good for business. Some great networks to tap into there, and obviously it's an island. Weather's good, people are good, food's good. So
Okay.
that, and then potentially going back to Dubai. But the issue with Dubai is that for 5 months of the year, 4 or 5 months of the year, it's too hot. The summer period is just ridiculous.
Mm.
So yeah, I think I'm done with the UK, and I think a
Those are
lot of
good
my
options. Those are
yeah,
very good
man,
options.
some good options. I'm excited to move the family. I think yeah, we're done with the UK, man. Like it's
Mm.
just the country, the economy, everything is just
Yeah.
a bit backwards. Yeah, man.
Not the first person that I hear about this. So
Yeah,
yeah.
yeah.
Why
Um,
markets downplay on Iran war? Well, depends on which market do you mean. But for example, the oil, which I wanted to talk to you guys about, also made a pretty bullish move here, about $10, because Iran is an energy superpower. So once on Thursday, I think it happened on Thursday, the Israelis attacked on the Iran, the oil price immediately exploded uh, by $10 within a few hours. As I was saying, mostly because Iran is energy superpower, it might disrupt energy or oil market. That's why are now risks more towards the downside, because if anything like that happens again, we might see another very bullish momentum on oil, not gold. What types of questions? I'm mostly asking questions about trading. I don't recall. To be honest, I don't recall any question that I've asked. Yeah, probably once I do recall which currency pair is called cable. Questions like that, mostly about trading, about forex terminology. You'll see for yourself. You'll see for, but it's trading related questions. Yeah, that one was a bit tricky, but a lot of people knew the answer. That cable is actually GBP USD. It surprised me. So you'll see for yourself. Are you going to be also analyzing today the US or Nasdaq
Me?
indexes? Yeah, yeah, yeah.
Yeah, definitely.
Okay, okay.
Definitely. I'm
So
pretty much sort of ready to go here.
yeah,
I'm not
okay.
lagging, am I?
No. You okay? You okay?
Thank goodness, because I think I do at some point need to upgrade my. I've got a very powerful um, desktop. It's an MSI, you know, like one of those gaming ones, and
Yeah.
it's pretty decent. But over the last sort of year or so, I think I need to just clean it up. I think over the last year it just freaks out. Sometimes I think it's my internet, but it's not my internet. I think it's to do with my desktop. It like lags out. But I've got so much running on my computer, and I think it freaks out basically. So
No,
anyway,
I think you're good. If something, please let us know, guys, in the chat. But at, from my standpoint, it's pretty good.
yeah,
Okay,
good,
I'll
awesome.
just then stop sharing the screen because I
All
thought
right,
I'm going to start by you connected pretty soon, and I'll probably just jump in at the very end or
of
in
course,
between. I'll try to
please.
think of some questions for our traders as also part of the giveaway. And if I find something, because we've got a lot on economic calendar, then I'll probably just
God, yeah, this,
interrupt you and jump straight into it.
yeah, man. I think let me share my screen,
Yeah, sure.
entire screen. Share. Give me a moment, guys. Okay, let me just close this. Close, close. All right. You can see, can't you, Jake?
Yes, I can see clearly. Perfect.
Oh, yeah, man. Awesome. Yeah, as Jake says, guys, it's a busy week. And like for me, when I was looking at the calendar last Friday, just for this week, I mean, I love this game and I love, this industry that we're in. But frick, man, when we have weeks like this, it just I sometimes implode. Just like gives me a bit of anxiety. It's like because I've got to prepare. Um, I still been in the game for a long time, but I still have to take all the time to prepare and make sure I've understood everything correctly to see how how I'm going to position into the markets. Because with a lot of people, if they're unsure of what's happening on a macro level fundamentals, then they'll just sit out. But when you sit out completely, you're good. If you're gonna a person that's sitting out, you're gonna be sitting out for this whole week because it's back to back to back to back with risk events. So it's always good to try and you know take yourself out of your comfort zone and try and understand what's happening in these beautiful markets. So look, let's where should we start off with? I mean, we always start off with dollar, don't we? So what I will do, I'm going to talk about the dollar quickly. I'm not going to go over everything because from the previous streams why the dollar's selling off. I'll just quickly bullet point it. But then we're going to then dissect what we're looking at in terms of opportunities and then what potential scenarios we're going to see this week on Wednesday for FOMC. Okay, because it's a big decision. This one, I mean, every decision's a big one, but this one's big because we've got a lot of things being thrown into the pot for the FOMC to consider. So let's start off with the dollar. Look, guys, we have, as you know, from when we started these streams, and if you've been watching the market update videos that have been going up on the YouTube channel as well, we've been in line with these dollar shorts all the way up here in March. Okay, when the tide turned for the greenback because of all the uncertainty on a debt level, increasing debt for the United States, the tariffs, geopolitical tensions. Stagflation, growth slowing down, high inflation. So there's been a number of things that have scared off foreign investors. And we spoke about in our previous stream as well about how institutions, pension funds, portfolio managers are hedging their dollar risk, their dollar portfolio. Okay. So they're hedging against the potential downside for the dollar. And a number of people are speaking about the dollar losing that reserve status. We're on the path of de-dollarization, the dollar not being the reserve currency of the world. We're on that path. How far away we are, we're freaking far, but we're on that path. So there's a lot of things that are just going against the greenback right now. And you know, when we have the dollar was classed as a safe haven, it's kind of that status is deteriorating. Okay, so dollar just remains vulnerable in a nutshell. Now, last week, quick recap, and it's important. You see, everything that I go over, I mentioned for a reason, just so that everything can stick in your head and we paint a picture. Last week, we had softer inflation. If you look here, so CPI, consumer prices, our prices for our goods and services when we go out shopping, go and fill up our cars, all that good stuff. Prices are coming down in the United States. Well, say coming down, they're slightly lower than previous and lower than expected. So inflation's cooling a little bit, signs of cooling, which is what? What does that mean for the FOMC? The reason the FOMC, when you look at the previous rate decisions, okay, let's just quickly just look so you guys know, right? The Federal Reserve, the rates have been on hold for 1, 2, 3, 4, and likely going to be 5 months, okay? The reason they're keeping rates higher, you guys know why, right? I'm sure you know. Tell me. Yes, exactly. They're keeping rates higher in order to bring down inflation, right? That's why the guys are like, look, we're not going to rush to cut rates until inflation comes down. Because if we cut too fast, you know, Americans love spending money, okay? I mean, who doesn't love spending money? But reason I say Americans love spending money is because these guys have high debt levels. People in the United States have been maxing out, and I've seen the data. Okay, I can bring the data up for another call because this is a red flag anyway. People have high debt levels in the United States. They've been maxing out credit cards, then they'll get another one, max that out, get another one, max that out. And they were doing that largely, you know, when rates were low, you know, when after the pandemic, rates were like next to nothing, so people could borrow money for free. But then stupid people, you know, classic human being, forgets the downside where they have to pay interest back on that money. They think it's free freaking money, but it's not. So now all these Americans are paying high interest on the short-term debt, worrying. The delinquency rate, what's the delinquency rate? The delinquency rate is the rate at which people are, you know, failing to pay back in a timely manner, potentially defaulting on their debt. This is happening in America. It was spoken about a few months ago. It's been swept under the rug for now. The news wires aren't publishing it right now, but it will this stuff will garner more attention. But I want to stick it into your head now so you can start, you know, continue to think and ask all these questions. What's actually happening, you know, outside of non-farm payrolls, outside of FOMC, which, you know, everyone knows in terms of the main figures. Look at other micro pieces of information like this. Okay. Sorry, guys. Let me just turn this off. This is it's my system's going a bit crazy. Yeah. So I expect further dollar downside. All right. I expect further dollar downside. We've had, obviously, structure remains intact, as you can see here. We've had low inflation now, and this takes us on to this week from the FOMC, where we're expecting, sorry, I've just gone past the FOMC. So this week for the FOMC, we're expecting them to be unchanged with rates, okay, this time round. If you look at market pricing, this pricing's up to date, okay, right now, you can see markets are expecting a hold also in July right now. But when we have the decision on Wednesday, Jerome Powell, I believe he should say, look, something along the lines of this, right? They'll never say, oh, yes, we're going to be cutting rates this amount of times, or, you know, they will never tell you that. But what they will tell you is they will tell you, okay, markets, we're making progress now on inflation. Markets, inflation's coming down now. So what does that mean for you? What does that mean for us? It means he's telling you we're getting closer to more. What you're pricing in right now is potentially out a little bit. We may cut more than what you're pricing in right now. Markets right now pricing in just one cut. Okay, generally speaking, we're getting that cut at some point. These expectations, I think, will change. I think we'll see growing expectation. I mean, they've shifted a little bit actually today. These have gone up, to be fair, the probability, but I think they will change further, and that will be a dollar negative. We could arguably say, guys, one of the reasons it's been holding up the greenback right now, when I say holding up, I mean it not completely going to hell, you know, because one of the things I'd say is helping the dollar, but nothing's really helping the dollar right now. Not even those safe haven flows when we had US, Iran, Israel. Nothing's helping the dollar. But one thing that may have helped further downside is the fact that the FOMC, the United States, still have higher rates than a lot of major central banks. But with those higher rates is higher risk. Okay. So anyway, if the FOMC starts signaling to us on Wednesday, which I believe they will, I believe they're going to take a dovish tilt. All right. And that'll be enough for the market to be like, bam, we're pricing in more cuts. Let's sell dollar. This may be good for stocks. It depends on, we're going to look at stocks in a moment, but it depends on if he's worried about the economic outlook. If he's worried about the economic outlook, it may hit stocks as well. But if he's just talking about inflation's coming down, we're making good progress, then that'll be bullish for stocks. It'll be negative for dollar. So look here at the dollar. I thought at the open there was the possibility. I was just looking, because of obviously Iran, Israel and Iran. I thought there was the possibility of this maybe pulling back a little bit, coming back into this sort of region before carrying on selling. But what we've had here is what I was previously looking at of this classic breakout and retest. Okay, and what's beautiful, guys, is we've printed fresh 2025 lows. So I'm just clearing this up a minute. We've printed fresh 2025 lows, right, which we expected. Remember in the last stream, I said we're going to see April lows being taken out, and we're seeing just that. Now we're going to be penetrating 97.50, 97s, and which is going to open up the floodgates for where? When you look left of me, guys, look left of me. Look at the next major zone here, 96.50. Oh, God, this is beautiful. Why? Because it presents opportunities, man. When the markets are moving, and then look at the structure. Oh my gosh, that is beautiful. Just how intact it is and how it's just going hand in hand with the macros. The macros are shaping up this structure here, guys. Now look at euro. Let's just look at euro a moment, because euros obviously presents an opportunity to us. Now we've had a bit of a breakout. Okay. Obviously I know Jake was in line with me as well. In our previous streams, we've been talking about this euro upside heading into 116. Obviously we've seen 116 now. All right. So we've come up to this 116 area. Highs for 2025, and we're going to go and challenge that again. This obviously people could look at this and be like, this might be a double top. I don't think this is a double top. I think this is a case of breaking through and extending to the next major zone. All right. If we look here a moment, I'm going to look at specific trade in a sec. I mean, we're already up 48 pips. I think we just missed the trade. One moment. For me, it'd be here. 117 is the next zone after we tackle 116.50. But I'm just going to drop down to the 30-minute. Yeah, I was watching this. I missed this. I would have got in. You see my flags? I like my flags here. We had a nice flag there. Oh, what's going on here, Trader View? Oh, whoa. Anyway, we had a breakout here. This is where I would have been interested to take some longs and run in there and push to the upside, but we've missed that now. So we've had a breakout and retest this morning of Asian range high, and then a big bullish momentum, consolidate for a little bit, and now an extension to the upside. So naturally, you can see where we're going. We're going to try and deal with these highs here of last Thursday, of last week, and look for a potential breakout and retest, get comfortable here before we look at some further longs. So further upside there, if you're running longs euro, this has a clean run in towards potentially into this 16.50 area. So just keep an eye there. I like that upside pressure a lot for euro. I'm just going to quickly jump over to dollar yen, because I was eyeing up some shorts here for dollar yen. Give me a moment. I'm just getting up my some notes here that I had. Okay, I'm just going over to dollar yen, just looking at some dollar related. So the beautiful thing about dollar yen right now is similar to Dixie. Structure is bearish. Okay, you can see it's bearish, lower highs, lower lows, very clean. We've just had this period of consolidation right now. Can you see this consolidation? And we've just had a rejection here. Sorry, again, up at this, I know it looks messy, guys, but this upper acting trend line, okay? You can see that's been respected for a while, just forming this structure, essentially. So I like these shorts where we're at right now, okay? I do like these shorts a lot. I'm just going to go to the daily a moment. Sorry, let me just go to the daily. I'm conscious I'm slowing down just because I just opened up my VPS. There we go. I'm still good, Jake.
Yeah, you're still good.
Okay, awesome. Yeah, I just thought I might have slowed down a little bit there just because of
No. Everything's clear.
Yeah, cool.
So far.
Yeah, so guys, I have some shorts that have been executed here for you, Jay. I was just watching because I had an order in the market. So I'm just going to talk you through that now. I'm just going to give you the actual trade that's been executed. So shorts at 43.83. So literally up here at this rejection. So, well, right now, after this rejection, respecting structure there, those lower highs, lower lows I've just been talking about. And we're actually targeting 140. So we've got targets down here on this potential breakout. So 142, 50 down here. Sorry, 50, nice and round. And then stops on this are placed at 144.18. Basically, um, just a little bit of breathing room just above where we started topping out, basically. So with the thing is with dollar yen, obviously we've got that dollar weakness, right? Which I've been talking about. The yen, remember, is still a safe haven. We've still, regardless of, I know we've effectively, we could argue that what's happened with Israel and Iran is now priced in, but there's still the risks there. There's still a lot of uncertainty. There's still uncertainty that the US may have some involvement one way or another. Leave politics aside, but there's the risks there. So there's just so many growing risks for the United States and supporting factors to at least hedge some of that risk with alternative safe havens such as yen. So I like this structurally. I like this fundamentally to see get a little breakout here. Come and challenge these lows. I'll be looking at big swings when we finally break down 141. I think I've said this on previous streams. Break retest here, this massive zone, and then looking to run this to the downside in towards 134, because even then, that's the next major zone. Okay. And I think that could be seen. Now, on yen, I just want to quickly, and I'm going to get Jake's thoughts because I'm conscious I'm speaking a lot here. I've still got a lot more to speak about, but
No
I can
problem.
go on and
I
on and
was
on.
I was just wondering, are you about to speak about Bank of Japan rate
Yeah,
decision? Yeah. Okay.
yeah,
Okay. Then I'll let you. Then I'll ask the questions after
yeah.
you done with the analysis of the
Okay,
Bank of
I'm just
Japan.
bringing this up here just so you guys can see. So we have BOJ tomorrow. Okay, tomorrow evening. Remember, the bullish thing about yen, which is not fully in play right now, but the bullish thing about yen is, guys, remember, you know what other major central banks are doing, right? The Bank of England, the FOMC started cutting, didn't they? The ECB, all these major central banks are cutting rates, but the BOJ are now raising rates. Okay, so there's what's happening is, remember, for many years we had that divergence where rates were low in Japan. You couldn't get anything for your money. If you're a foreign investor, it's not really enticing to come into Japan and invest because the rates were low. But everywhere else they were high. So we had that what's known as a monetary policy divergence. But now where everyone's cutting rates, so this is rates everybody else, BOJ are lifting up very slowly. So that big gap that we had before is now narrowing. That divergence is narrowing. So this isn't a massive trade right now, but it will be. It will be, and it will pick up some pace, okay, as that divergence further narrows, okay, because it's money flows. You have to understand the carry trade. People previously used to borrow in Japan, right? You borrow in Japan, and then you take that money, and then you go and invest elsewhere, where you can get a yield because rates were low in Japan. But that carry trade is diminishing, okay, because of that divergence narrowing that I just explained. I hope that doesn't go over your head, but basically, yeah, rates between the two, the difference is shrinking. Okay, so that will give yen some hand back, some upper hand. Now, what are we expecting here on Tuesday, guys? Well, they're not expected to do anything. To be honest with you, I think this is going to be a non-event. It's going to be another non-event because from what I've been reading, I don't think these guys want to look to raise rates until 2026. Now, if you look at what markets are pricing in, markets obviously reading in between the lines of the recent comments. We're not expecting, look, hold. These guys, they move like turtles, Japan. They're traditionally known for just moving very slow, as in the Bank of Japan. They don't rush to do things. So we're not expected a hike until 2026, which obviously it's not really bullish for yen. It's a non-event for me. I don't think we can expect some fireworks at this decision. So yeah, I mean the volatility for dollar yen's most likely going to come specifically of FOMC. If we look just quickly, I just want to quickly show you something. So Japanese GDP, okay, their final GDP was slightly higher at 0, but they still their growth is still not where it needs to be. So I think that's something the BOJ will be conscious about. That GDP is still lagging a little bit. We've got no growth basically at the moment in Japan. Inflation, PPIs came down a little bit, which they might be worried about. Producers' price came down to 3.2%. Remember, if we raise rates, inflation cools. Okay, so that they want to keep inflation elevated as much as possible. But this is cooled a little bit in terms of those PPIs. And then I believe the CPIs, I just want to get the CPIs up. CPIs, core CPI, okay, still elevated 2.4%. And the Tokyo year on year still elevated 3.6%. But wages came down in Japan, which is deflationary. Where are the wages gone? Sorry, guys, I'm just, I think I just went past it. Yeah, look, cash earnings came down to 2.3%, lower than expected, 2.6. You know the link with wages and inflation, right? If people are getting higher wages, typically speaking, we should see higher inflation because people are spending. Okay, spend, stimulate price of goods and services. So anyway, I think given the uncertain environment with tariffs are still not fully done yet off the table, with potential economic downturn, with you know, there's just the uncertain environment. I don't think these guys are going to rush right now. I think they're going to be waiting until 2026 for rate rises. Okay, further rate rises. I don't know if you have any sort of thoughts at the moment, Jake.
Yeah, I was about to ask, where do you believe will this momentum come from, either the dollar or Japanese yen? Because my latest news were that the officials in Japan are a little bit skeptical about the GDP, as there's the
Yeah,
trade war, which you covered. So yeah, I was thinking that if Bank of Japan will keep the same rates for even longer than they are expecting to do. Oh, not raising the interest rate, keeping it on the same level. If there's going to be some other bullish momentum from the Japanese yen, but from what I understand, your shorts on USD Japanese yen goes mainly from US dollar, right?
yeah, it's mainly on dollar. It's mainly obviously structure here has just been very clean to the downside. But yeah, it's leaned towards that we are going to get that dovish tilt from the FOMC. I think
Yeah,
BOJ this week, guys, with your yen pairs, I don't think expect any fireworks. Okay,
yeah, I
the
don't think so.
volatility this week will come from FOMC
Yeah,
specifically.
I've got most likely the same triangle that you have on US Japanese yen. Also waiting whenever we're going to break above or below. I'm also with you. I think that most likely we're going to break below. If not, the chances for delayed in a rate cut from Fed are increasing, meaning that
Yeah,
if we get, I think we've got tomorrow retail sales data. If
retail sales,
they,
correct.
yeah, if they come higher, like way more higher than what is expected, we might actually anticipate the inflation to also tick a little bit higher. In that regard, we might see chances slowly getting on the delay for the rate cut in September, but if not, I think the US Japanese yen should go most likely downhill. So yeah, I'm on it with you. I just wanted to ask before you analyzed it, but once you were analyzing it, you basically answered me. So so good.
Yeah, awesome, awesome, wicked. Yeah, so
Just before you continued really quickly, I wanted to ask Chad for another question for the giveaway. If they actually paying attention, what what Ken was saying about the Fed, is it going to is the Fed going to deliver rate cut, hike, or pause this week? So you guys can answer in the chat, and I'll pass it back
right.
to you, Ken. I just want to find out if they're actually paying attention of what are you providing them with insights, because I think it's very valuable.
Why is everyone in the chat dropping fear of missing out? Did I miss something?
No. That was the previous
Oh,
previous question. I was asking what's FOMO means or stand for in trading.
oh, right, yeah, yeah, fair. So, okay, let's. I'm just seeing some of the answers coming in.
Now,
Oh,
you guys probably speak about September. I mean, this week, is Fed going to deliver rate cut, rate hike, or are we going to keep the same rate on the pause? Yeah, okay, no chance this week. Okay, we've got one. Second one. Okay, perfect. I wasn't probably clear with it. my fault that I'm speaking about September. Okay. Yeah, I just wanted to test it. I'm passing Mike back to you, Ken, if you want to.
Yeah. All right. I'll stick with dollar related for a moment. I just went off into yens right there. Actually, I'm not really interested in anything else dollar related.
Oh,
I'm going
okay.
to talk about GBP because I like GBP a lot versus the dollar. I like it a lot, as I said
Mm.
in my previous stream. I've been a pound bull for a little while, and man, look at that freaking structure for GU. It's like a staircase, boom, 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 and it's
Yeah.
clean. Higher highs, higher lows, higher highs, higher lows. We love this. We love this sort of price action. This is where people can really, capitalize when things are nice and clean like that. So, as we know, GP's been, this is taking advantage, obviously, on dollar weakness specifically. We're getting a bit of a breakout this morning, just on that dollar weakness that we're looking for. GBP, we do have a risk event this week, by the way, and it's the Bank of England rate decision. So let's just pull it up here. And we've got CPI as well. Now, with the Bank of England this week, guys, they're expected to keep rates unchanged. Okay. Similar to the FMC, keep rates unchanged. One of the key reasons, they both share something quite in common, which is inflation. Okay. Inflation's still high, but it's much higher in the UK right now. Okay. So when you look at the last CPI reading, it jumped up to 3.5%. Okay. Expected was 3.3. The previous was 2.6%. It's expensive here in the UK, man. Prices are high.
Yeah.
Now, what are we expecting from the Bank of England decision? You see how these guys have been cutting rates, right? They cut, hold. Like, let's go here. So from 5.25%. So they cut, then they held for 2 months. They cut, then they held for 2 months. They cut, and then they held. Now, there is the possibility that these guys break this rhythm, where they hold for a couple of months. I think they're going to get the markets ready for a cut. Not this decision, potentially the next one. And the reason being is because data's still a bit hit and miss in the UK. If we look last week, jobs data, labor market data wasn't great. Earnings, wages coming down. So that's potentially disinflationary. The amount of unemployment benefits in the UK jumped up. Okay, so we've got more unemployment claims. The unemployment rate jumped up to 4.6%. Okay, so we've got a higher unemployment rate in the UK. So that's not great from an economic level, right? GDP, minus 0.3%. Minus 0.3%, a contraction there in UK GDP. Bad. Okay. So the thing is with the UK is we've got, by this data, right? We've got high prices, but then low growth. So that's like stagflation. So I think the Bank of England will need to recognize the downside risk and potentially look at a small cut sooner rather than later because of this risk of economic slowdown. Let's see what happens with CPI on Wednesday, because if this number comes out higher than that 3.3%, GBP will catch a bid, will strengthen because markets will think, all right, these guys aren't going to cut. But then the Bank of England could come out on Thursday and be like, look, we need to get ready for rate cuts because we are seeing, slowdown in growth. The labor market, we're seeing rising unemployment rate. If they start mentioning this and their forecast for the UK economic outlook is lower, then markets will read between the lines and expect rate cuts, which will be GDP negative, but versus other peers. I'm not GDP negative versus the dollar, okay? Because this dollar weakness is too dominant. I'm GDP negative again versus other economies, all right? Other currencies, GP CAD, GP Aussie, GP NZD. These currencies these pairs have topped out, okay? They've topped out. But GP dollar hasn't topped out, and this further dip buying is going to continue to be seen. Stick with GU with me at the moment, guys. If we look here, I'm just going to go to the weekly chart just so we can see the next major zone, which is where we've obviously topped out last week, 36.50. There's a lot of traffic here, a lot of congestion, okay? Because from 36.50, then I'll be looking at 37 on those. So those round numbers, more or less. So 37 after 36.50, then 37.50, pretty much round numbers. When you look left there, it's the round numbers. So, let's go here, 37s. Let's see what's happening with GU. Okay, similar to Euro. I was watching this, but again, just missed. busy. So I missed these trades. I was looking at these for rooms for breakouts, these flags, structures there intact. Nice resumption to the upside. We had a breakout retest, Asian range high, Asian range, cleared it, consolidate, classic move, build up some momentum, breakout. And we've seen that nice breakout there. Beautiful, beautiful. So extension to the upside. Where are we going from here, guys? For me, when you look on the 1 hour, what I like the look of here, okay, now call me a technical noob, but we do have, a bit of a W here. You can see the resistance where we've just had that surge of volume momentum coming through, breaking through that. Nice psychological 3600 number. So keep an eye, extended move to the upside. You want to watch this potential retest here either way, because that was where there's a lot of, you can see a lot of, there'll be a lot of demand there, form a supply. So we'll most likely come back into here and tap and potentially room to the upside. See how we deal with these highs of Friday, right? See how we deal with that. And then look at getting comfortable for a run in towards 3690, 3700. I'd say this needs to happen Tuesday, because there's risks that this slows down a little bit, depending on what happens with the CPI. If that calls, this move's going to slow down. But stay with me here. If you see CPI call on Wednesday, it'll be Wednesday morning UK. If this calls, personally, for me, I'll be looking at buying those dips, because the dollar weakness is so strong right now. Okay, so if you see lower CPI, there may be room for potentially buying those dips, because it will pull back a little bit, but those dips will be bought, in my opinion. Okay, so dip buying still with the likes of euro dollar with GU. I think the dips are sexy. I'm going to just quickly go over to. I'm going to come back to the. Sorry, I know I'm just jumping around a little bit like a crazy horse. I just want to go to Nasdaq, because obviously we've just had the US Open. Okay, the opening bell on Wall Street. So obviously you guys know I like to trade when the opportunity is there with the open range breakout. Let's put the 15-minute candle up here. So this is closing in a moment. So the 15-minute candlestick from the open at 230. So you go from the low to the high. I'm just marking it up right now. Obviously dips have been bought, right, with stocks. Everyone's asking, I know people are asking to start the stream, why the hell are we buying stocks? Why? Because as I said, this Iran and Israel stuff is awful. But markets are ruthless in the sense of once they've dealt with something, they've dealt with it. They priced it in, onto the next thing. Unless you're going to escalate, I don't give a fuck. That's not me saying that. That's what the markets think. So if we get a escalation on a regional level, other counterparties getting involved, problem. But if it remains contained between Israel and Iran at this stage, then it's markets can deal with that. Okay, so dip buying. Obviously, we had all that selling pressure initially. We broke out. If you see how I need to clear up this chart. There's a lack of chart hygiene going on here, and it's pissing me off. Anyway, so how we obviously buying those dips. We were long Nasdaq for a while. Structure was very clean. We broke out here because this was obviously the attacks on both sides, Israel and Iran. Big drop there for Nasdaq late on Friday as well. And now obviously we're repairing that move. Trump said as well he thinks he can broker a deal like he did with Pakistan and India. Let's see. This guy thinks he's freaking a saint, but you never know. Let's see what he can do. Trump can do a lot. I like the longs anyway with Nasdaq. I think we're going to come back. Basically, this will essentially be a fake out, and we'll come back above and start respecting structure again and print a new high. Let me just clear this up a little bit, guys, and I'll walk you through, because I do like the idea of longs. I mean, we're already up 1% on the day, but we can go more. We're seeing something similar here, a bit of a W, taking out that neckline, that surge of momentum going through there, through sort of 21.8. And now we're at a bit of resistance. See that form acting trend line. Call me a basic BITCH, but, obviously you can see this trend line was valid and we've rejected there. And now we're coming up for a test again. So, we can carry on. Once we get comfortable above there, that'll present an opportunity for high highs, basically fall back in line with this structure that we set off here. Okay. So I like the idea of longs. On the opening range breakout, we've got our levels marked up here. Range low, range high. And obviously we're testing the high at the moment. What I like to see, as I say, on a 5 minute is waiting on that 5 minute to grind above that, get a firm closure above, retest, hold, and then dip buy. And then I'll be running like a risk to reward of 2. Okay. And to be fair, I'll be looking at these highs here. There's an area up here that I'd be interested in where we topped out there on Thursday. So something like this would be of interest potentially to me. Structure is obviously intact. Guys, can you see that? High highs, high lows, boom, 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 boom. Clean structure. Excuse my dirty chart. It's really dirty, as in messy. But this is the sort of thing I'm going to be looking at today. Potentially, if we can get that, then I will take something like this in a run for those highs there. Okay, being conservative. But yeah, man, I think unless something drastic happens, I mean, it is drastic enough, isn't it? But unless something scares the markets again, people are just going to keep buying stocks. Everyone's buying dips at the moment. It's crazy. It's strong. So dip buying expected there. And, when you look at these monthly performances so far, they're heavy. You can see we want to go to all-time highs here for NASDAQ. We're going to. Remember we had this bullish pin bar here, big bullish candlestick in May, and we're following up so far in June. No signs of a slowdown, really. I think we're going to go and tackle these highs, and I'd like to see what happens here because obviously we're going to be met with some selling because it's heavy. This is a heavy area of all-time highs. So let's see what happens up there. But I think we're going to test this week, in my opinion. We're breaking out a bit of a structure there as well. Bit of channel, breakout and extension to the upside. So this looks clean. It's given a green light to carry on pushing to the upside, in my opinion. Clean room and dirty charts equals profits. See, someone's message in the chat. That's funny. Yeah, to be fair, my room's quite clean. Actually, my office is quite clean, but my charts are pretty dirty right now. Let's go on to. We'll talk about Swiss because someone just mentioned Swissy, and it's very important to note. Actually, this is. There's a lot of volatility here as well. Okay, let's go on CHF. Okay, CHF. Bam, bam, bam. Okay. All right. This week, guys, we do have the S&P rate decision. Someone's saying, why CHF or rate cuts? Very good question and very valid question, my man. Somesh. I see you're a regular in the chat. It's good to see you, my man. Somesh. I hope I'm pronouncing your name correctly. FX Somesh. So, why all the rate cuts in Switzerland? Why are we expecting rate cuts? And look, 0. This is going to be the lowest major central bank level, in terms of rates. 0. Why are they doing that? I'm going to show you. Let me get up trading economics. Let's get up trading economics a moment, guys. Calendar. Just showing you guys a minute, and then we're going to talk about these details. CHF. Let's bring up category. Prices, inflation. Okay, look at that. You see this? Minus 0.1%. Do you guys know what it means? Does anyone know in the chats out of interest what it means when we have like a negative number on inflation? What does that mean? Negative number of inflation. Anyone in the chat? Tell me, baby.
Yeah, we can do actually another giveaway question for that. Looking forward if there's someone who actually knows the answer to that.
Yeah. I'll be surprised someone does, and I think hats off to you.
We do have. Yeah.
There we go. Someone's dropped it already. John Garcia. Hit the nail on the head, my man. Did you see that, Jake?
Yeah. I see it. See it. Perfect.
All right. Yeah. So deflation. All right. So that's exactly it. It's deflation. So if prices are going down into negative, that's deflation. It means, potentially what it means is people aren't spending. If people aren't spending money, then businesses that are offering these goods and services are going to keep putting down their prices. Prices are going down. And then they just go into deflation mode, okay, where prices are no longer rising, they're falling. So the S&P is thinking, crap, we've entered into deflation here on the year. We need to do something. So how do we counter deflation, falling prices? We go and lower everyone's costs, go and lower their borrowing costs, encourage these guys to borrow money and go and freaking spend and go and stimulate the economy again and bring up prices. So if we look at market expectations, it is for a cut of 25 base points. I'll put it here, S&B. As you can see, 100% priced in. But where we're going to go in terms of movement is if these guys surprise, and they've surprised before, they could go and cut by 50 base points and take the rate into negative. It's possible, right? We last had negative rates for Switzerland not really long ago, 2022. Okay. So this is interesting. If they don't go and cut rates by 50 basis points and they just do 25, we can expect CHF to strengthen. All right. If we look at some Swissy pairs are bearish still. All right. When you look at Aussie Swiss, I'm going to bring them up. Let's just go over them quickly. If we just go on the monthly, first of all, I just want to go on the monthly. I can't, obviously they've been very bearish. I know we've had a pullback, but like we've got this massive freaking wick, which I'd like to just see being filled, you know, to the downside. I know we don't always get wick fills, but it's, I mean, you'd suggest it's a bit bearish. Weekly obviously structures to the downside, you know, we had this period of consolidation, but now sort of structured again south, potentially lower high there, then obviously breakout retest of this key zone, and then making way further downside. Weekly rejection there again last week. So it is bearish, but I mean, when you look at that price action there, it's horrendous. Like this is just range. We're just ranging really at the moment, aren't we? We're just ranging. But we're trying to grind to the downside. You know, we've had a nice little flag breakout on that retest there, a little evening star followed validated by that closure below. So potentially forming a bit of a structure to carry on to the downside. Okay.
Yeah, I would agree on this one, most likely. Especially Frank. I don't know how about you, but I haven't been taking short position on Frank for maybe 4 or 5 years. And Frank is such a strong currency. Even whenever they are cutting interest rates, they're still considerably one of the strongest currency on the market.
Yeah.
Everyone's flowing their money into Swiss franc, like, and also it's pretty stable economy outside deflation right now. So I wouldn't be me at least looking at the index of Swiss franc. I wouldn't be taking shorts against like Swiss franc. So yeah, shorts on Australian dollar Swiss franc, yeah, as you taking shorts on Australian dollar against Swiss franc, but not other way around.
Yeah, yeah, agreed. Especially, yeah, we've got all the economic uncertainty, and obviously all the
Yeah.
money in uncertain times goes to Switzerland. But yeah, at the moment, a lot of these Swissy pairs are just awful. Look at CAD Swiss, man. Like, who's trading that? Nothing. It looks. I think it's very liquid right now. Like that. It just, oh god, awful. NZD Swiss. Oh my goodness, yeah, it's the same. It's really really bad price action right now. So I mean, for us swing traders, this is not heaven. This is hell. So if you ask me where Swiss is going, I'd still lean towards downside. If they just cut by, as I say, as expected, 25 base points, then that will be CHF positive. If they say, look, we're cutting, but we're not finished yet, guys, then we could get a little bit of near-term CHF weakness. All right, there may be some volatility to the upside for some of these Swissy pairs very near-term. If they cut and if they surprise the market to cut by 50 base points, expect big CHF selling. Okay, because it will near term, because at some point markets will flood back into Swiss franc anyway. You know, when everyone else starts going to negative rates or lower rates, and we have an economic downturn, then CHF will be king again. So yeah, man. What, Jake? What do you think? What do you think these guys are going to
Yeah,
do?
I can share a little bit of charts as well.
Yeah, please do.
Share the screen.
Please
Okay,
do, my man.
where is my? No, I'm going to share the screen entirely. Probably, yeah. This one is it. Okay. I don't know if you can see the screen. Probably. Let's see. Can you?
Yep. All good.
Yeah, perfect. So this is basically just the index of Swiss franc, and doesn't matter how far you zoom out, it's still bullish, very bullish. So that's the reason why I wouldn't go. Maybe if they actually deliver, as Ken said, 50 basic points, some short-term shorts, yeah, are optional. But other than that, I wouldn't actually. It's not worth it, at least for swing traders. Maybe you can find some short-term opportunities on a Swiss franc market, but It's too much risk for me. One of the pairs that I would like to return back is the Euro Australian dollar, my favorite in
Yeah.
past few weeks. uh, I was basically just last week saying that in my mind 175 will hold, because the way I approach the market is trying to analyze individual currency based on the index. What I do either technical analysis and then I take a look at the fundamentals. For me, Australian dollar is still very weak. Not only that, it is delayed based on other central banks. It was the same last day in before July, when other central banks were already starting cutting, while the RBA was already hitting the top of the hikes. So in that regard, RBA is still delayed and will deliver more cutting than other central banks, in my view at least. And
Mm.
Euro right now, as we were saying with Ken for a couple of live streams already, is pretty much one of the safe havens. The big capital flow goes to Euro. That's why I feel that Euro will get another short for another longs. My mistake was that I closed the trade in not even in the 30% of the trade, which was unfortunate. I didn't expect that much volatility. Closed on 176. However, I'll be still looking for another long opportunity whenever we get back to 177 level or around this, which is 50-60% Fibonacci. So we've got a couple of highs here, so I think might be a good support beside the 177. I'm still pretty sure that we can reverse, or this is just a correction, but we'll reverse soon and we'll continue towards the upside. From daily, as a swing trader, I might be even open to the idea that we are going to, in upcoming weeks, hit 1.8 level. So that's as for the Euro Australian dollar. Euro USD, GBP USD, I'm mostly the same as Ken. However, I think from at least lower time frames, that till we had Wednesday, I don't think we will break right now. Till there's the Wednesday with the FOMC and then Bank of England on GU, I think we'll mostly go sideways.
Mm.
So if I'd be looking for any risky trades, which I might be, if there's going to be some candle formation suggesting that we might go uh, at least a little bit down before the Wednesday, I might be very open to that, because I'm not very sure. I'm not convinced that we are going to break before the central bank decision. But after that, it makes sense. It makes sense. And for EU and GU, I'm still very bullish. So on those pairs, I'm with you. And you also discussed the US dollar and Japanese yen, which I have pretty much similar triangle or whatever this formation is called. And you already said that you'd be entering right now, right?
What's that on?
On
Oh, UJ.
US
Sorry,
dollar. Yeah, yeah, yeah.
I was looking at stocks. Yeah, I've got some shorts running on UJ
Yeah.
right now. So
That's also
yeah,
make a lot of sense. You got bounce, sell, sorry, buyers weren't strong enough. We're getting bearish momentum. Uh, okay, I'm also pretty confident that we might break below the trade towards 142. You said for
yeah, I'm
yeah, I
looking
think
for a drop into 42.50. I know there's a bit of
Mhm.
a bit of support around 43, but yeah, I want to see this breaking out. Basically, I think we
Yeah,
can get a nice little breakout.
yeah, looks good to me as well. Looks good to me as well.
Yeah,
Didn't analyze much. Just to show for comparison, this is the index of Australian dollar, and we still got very bearish trend compared to Swiss franc. So maybe I start look for some opportunities on Australian dollar Swiss franc, which I didn't think of till you brought it up. So I'll probably go analyze that, and if we won't get the 50 basic point rate cut, I might be very open to take some swings on that pair.
nice.
Uh, Euro also very sorry, dollar also very weak, and Euro's getting pretty strong. So yeah, uh, outside the Euro Australian dollar, all with can. Uh, I think it makes perfect sense why, and also the analysis uh, looks the way that probably I would do it as well. Yeah, I can't speak much on indexes with you, unfortunately, because this is not my field, I would
Yeah,
say.
fair,
But as
fair.
for the forex, it looks very promising.
Yeah,
But
man.
bit afraid about the dollar still. I'll probably start trading it after we get the central bank decision.
Hmm.
But euro, Swiss franc, and Aussie are for me right now the clear choices.
Nice, nice, man.
Okay, so uh, do you have anything else on the schedule? Not on the schedule, but on the list of
Um,
markets that we'd like to just asking? You don't have to. You don't need to pull out anything if you
no, no,
get to go. But
that was it really. Stocks have just
yeah, okay.
ripped it. Stocks have just ripped it through the upside now. Just obviously, for anyone that doesn't know, UJ obviously has an inverse relationship. When typically when stocks are rising, UJ is falling.
Yeah.
Yeah, so we just had a nice little breakout anyway. Stocks just continue to buy the dips. structures remain intact. But yeah, no, that's all I want to talk about. Nothing else. Nothing
Yeah,
else.
I just wanted to also bring really quickly, forgot about it when we were speaking at the very beginning about uh, someone asked about
Mm,
the Israeli and Iran war and how
mm.
does it influence the market. I was speaking about this not drop, but skyrocket on gold,
Oh yeah,
which is
oil,
$10 move
gold.
after Israelis hit Iran's nuclear power plant. Something
Yeah.
very important in Iran. Uh, but then we now returning back. But I think once we cover uh, the price that was market at the very time before skyrocketing, there might be also a few opportunities for longs. Not sure if I'm wanting to enter at 70. Might wait for a little bit something lower. 66 looks pretty promising. But as long as there's a war between Israelis and Iran, there's still risk of something similar happening. As I was saying, Iran is an energy superpower, one of many. So might get into the disruption in oil market, and more bullish spikes might come to oil. Uh, what do you think? And do you trade oil as well, or
I don't trade
no?
oil. But obviously I'm very aware of oil because obviously at times I trade CAD pairs. So I'm
Hmm.
just keeping an eye because we do have obviously that relationship there. Um, I am aligned with you. I think oil prices are going to be going higher now.
Hmm.
Just on this, obviously this is not. I don't think this is expected to end anytime soon in terms of this tension.
Yeah.
And there's always obviously the threat. If Iran threatens again that they
Mhm.
could, for anyone that doesn't know, cut what's known as the Strait of Hormuz. You know the Strait of Hormuz?
No.
So yeah, it's called the Strait of Hormuz.
Okay.
Basically, this runs like through Iranian water, and it's where 20% of oil, people tankers transporting oil is
Oh,
20%. It equates
y-
to 20%
yeah.
of oil supply that's coming through the Strait of Hormuz. Yeah, so people can just pull that up on a map, and basically they've threatened that they will close that. It's effectively Iranian
Oh, okay.
territory. Um, so yeah, if they
Yeah.
threaten that again, and that they have the upper hand on that, basically that's something that they can keep in their arsenal. If Israel carry on doing whatever and they're not happy, they could be like, look, we're going to close this. And even if they do it temporarily, we're going to see like we'll potentially see like mini flash crashes in oil will
Hmm.
just shoot higher. So yeah, I'm definitely aligned with you. I am a bit. The thing is with oil as well, when you look, if you just put your chart on a weekly chart a moment, just
Yeah,
show put
sure. I can do that.
obviously you see structure still bearish there at the moment. You see
It
how
is.
we've
It is.
we've arguably formed another higher low, a lower high, excuse me, a lower high, excuse
Yeah,
me.
yeah, yeah, yeah. With this one,
Um,
yeah. Hmm.
yeah, this one, that one, exactly. So I'm a bit just conscious of that. if we manage to break out of this structure, then great. But I'm just conscious of that at the moment, technically. Um,
Hmm.
if I if I put my fundamental hat on the other side as well, is, if obviously we do have an economic slowdown, with the recession talk starts picking up pace, obviously oil gets hit, doesn't it?
Yeah.
Is people in economic downturns, oil gets smashed to pieces. So there's a bit of a risk there as well. But let's see. It's in the balance. If we break that structure, I'm all for this running back to $100.
Yeah. Hopefully, hopefully.
Yeah.
Well, if I'd be taking longs right now, I would at least targeting the 80, which is
Yeah.
like the middle of this sort of a range
Yeah.
between 90 and 70, which could be a good target. However, I'm really waiting just what's going to do price once we hit the very same level before the gold skyrocket on that very news. So
Yeah.
if we're going to continue further down, I'll probably won't trade it. But if oil reacts on that price, might be just a lot of panic orders there, and will eventually form some sort of a reversal pattern on the candlesticks. I might be very thinking about like taking it around the level 70 to 66. It's pretty wild range, but it
Mm,
all depends on the market developments at that time and when it hits the level. Yeah,
definitely.
we need some sort of a confirmations from candles at least, big shadows that I would be looking for, and other patterns as well. So yeah,
Mm.
that's as for me with the oil.
Yeah. One last thing, just because
Yeah.
someone just asked a question there in the
Hmm.
chat. He said, how has the Iranian war impact? Obviously, he knows we're talking about oil at the moment. How has it impacted? I'll just explain why it impacts oil, just so that moving forwards why oil is impacted, right? So you have to remember, Iran is effectively is an oil producing nation, and it's surrounded by um, other oil producers. Now, wherever we have war, okay, especially with oil producing economies, there's the risk that if there's war, there's risk of supply being disrupted. So what do we mean by that? We mean if there's war and one country starts targeting another person's oil producing facilities, they start targeting those, or they just have to shut it down because there's a war effectively. That reduces the amount of oil that's going out to the globe. If we've got less oil going out to the market, that means what? We've got less supply. That means prices are going to go up. Price have to go up because it's scarce, right? We've got limited supply, so price have to go up. So that's why war and geopolitical tension is a massive, massive mover of oil. It's one of the biggest, if not the biggest, factor that moves oil. War. So, or economic downturn. So, yeah, that's why. Just so you've got the understanding of that there, and obviously
Yeah. It's,
inflation as well. Yeah, yeah. So exactly. So yeah, that's
yes.
my.
Someone also commented that on the gold. I don't know if you did I miss it or did we not talk about gold today? I
Oh
think
no, we
not.
haven't. We haven't
Yeah.
spoken about gold. We
Because
can
right
do
now it's
that.
forming pretty well, to be honest. Hopefully, we'll get more on. Did you want to share the screen, or should I do?
It's up to you. If you're, if it's
Yeah,
up to you.
I mean, yeah. Okay, let me
Go on,
open
you have
the
the
window.
honors.
Yeah,
I'll throw my 2 cents after.
yeah. I haven't done oil analysis just right now, as I saw the comment in the live chat. Someone said the oil looks very good, which I think actually it does. We've got this trend line. Also, it's a safe haven again, so geopolitical tension, wars, as right now, Israel, Palestine, Israel, Iran.
Mhm.
It should perform well, to be honest. And if we actually won't break below 3.360, 3.380, I might be actually open to taking those trades on the gold, which doesn't look bad at all.
Mm.
Thank you guys for letting me know. I would completely forgot about the gold. But yeah, it looks promising. Do you have any analysis for gold, or do we
Yeah, I'll
leave it
quickly
for
come
the
over to gold.
Wednesday? Yeah. Okay.
I'll quickly. Yeah, people. Last week, I remember on a stream, someone was asking me, "Where do you think gold's going this week?" And I mean, it did what I said. Let me share my screen here. Bam, bam. Okay. So, whoop. Yeah. So yeah, last week when we're on our stream, gold was down here. Someone said, "Oh, where do you think gold's going?" I said, "I'm expecting it to go and fill this wick," and obviously we did that. We killed those highs and went into you know towards the all-time high region. Now, obviously, the beautiful thing about gold here, guys, is that we've on the weekly, when you looked, we've basically broken through a beautiful barrier, which was preventing the price from moving higher. Its weekly resistance was acting as a barrier. We had a fake out here. We broke above, then we closed back below. And then finally, why I said it was going higher, because obviously we've gone over all the macros already. We know why gold's being supported. But technically, I just saw this wick here and this candlestick, it's like a, spinning top. And I would like to see that. I was keen to see that being filled, and obviously that we saw that. Um, and structure was still very much intact. When you look here after this pullback, higher high, higher low, higher high, higher low, and then obviously higher high now. So guys, I'm with Jake. I like the idea of longs. Now let's just monitor, because at the end of the day, risk hasn't gone away. People are, I see on X, and X makes me laugh when you've got obviously the retail X traders on there, and everyone's like, "Yeah, gold, we've hit a triple top. Gold's selling now. It's all going all the way down," but like nothing's fucking changed. Excuse my language. It hasn't. Like nothing's
Yeah.
changed. All it is the end of the day, this is profit taking. There's hope that this doesn't further escalate, but there's still risks there. So people are still buying gold, guys. We're still buying gold. There's record amounts of gold being purchased. We saw reports last week. ECB are freaking loading up on gold. Everyone's buying gold. So I'm watching for a new higher low. Okay, watching for a new higher low somewhere here. Give it to me anywhere. I'm just watching for that stage of rebound, and I'm going to buy those dips. I'm going to buy those dips for another higher high, and we're going to go into those all-time highs at 3.5k. So that's that's the next move for me. That's the game plan, and I'm not missing this. I'm
Yeah,
sure.
3.5 looks really promising though.
Oh yeah,
3.5.
it does.
Yeah.
I mean, we're going to be magnetized to that. I think it's going to be sucked right in, and that'll be the trade. I think we'll probably get at least 3R on this potentially. So yeah, I'm looking at that, and I'm sure a number of the guys, the successful E8 trader guys that buy gold, are going to be looking at similar sort of trades. So let's see.
Yeah.
Mm.
True.
Yeah, man. That's it from me, Jake.
Yeah, me too. Me too. Do you have any final questions for the chat? Something from the top of your mind that we can probably ask him to give one more traded chance to win a free evolution,
Yeah.
or should I bring something? But if you have, I'd be open to
Yeah.
you asking it.
Okay. Let me ask. Okay. Um. mm, 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 mm. mm. It could be anything trading related.
Yeah, anything trading related, yield markets trading related, uh,
Okay.
fundamental analysis as you the expert on it. So
Yeah. Okay. All right, guys. Trying to think of something here now. You put me on the spot.
no, so if you don't have any, I'll just use some from the reserve probably. But if you have, feel free to do so.
um. Give.
Mm,
Yeah. No. No. I'm
yeah.
completely.
Okay.
My mind. I've got content block in my head right now. It's just completely blocked. I've been. I can talk for. I've been talking all this time, and now you just throw me off. Throw the curveball at me.
Didn't want to do that. Sorry. Didn't want to do that. Okay, so guys, probably I'll just get back to the indicators because last time we had, or maybe was also some forex terminology. Uh, but as we were talking about it today with the regard to UK, if you guys can tell me what's the term that describes, or what's the total value of goods and services produced by a country? There's a term for it, and if you guys know, we were talking about it today. I might also put that question into the display. Hopefully, I'm making it clear because I also make these questions as we go. If you don't know, I'm looking for the term, trying to hopefully pass not pass the knowledge, but keeps those important terms in fundamental analysis somewhere in your mind. So next time we're talking about them, you know, what are they? And also for the winners, if you can, guys, yeah, we've got one. Here's domestic price, gross price index. It's not, yeah, it's GDP. Okay. Who was the first one? Oh, the Black Sun. Okay, so I'm going to, guys, just so you know, I'm going to just write down into the chat the 4 winners, and if I can ask you to do something, please make a screenshot of your Instagram profile. I can tell whenever it is your profile or not. And message me on EHake on Instagram. If you prove it's your actual YouTube profile that you answered with on the live stream, then I'm going to provide you with the free evaluation, the giveaway. So I'm going to okay, guys. So these are the 4 that you answered correctly and quickly. So if you're one of the 4, please just screenshot your YouTube profile and send it to me to the EHake Instagram, and then we'll just get it done with the free evaluation. Perfect. Thank you, Ken, very much for your effort, your analysis, your time. I hope it was insightful for you guys, and I'll see you on the Wednesday.
See you
Perfect.
Wednesday.
Perfect. Okay, guys, thank you very much for showing up. We appreciate it. Thank you for being active, and we'll see each other on Wednesday.
See you
Okay.
guys.
Take care. Bye bye.
Bye.